For years, central banks have kept money cheap to support markets and indebted governments. The ECB led this effort by buying troubled assets and injecting massive liquidity. States benefited, but savers became the silent losers as interest rates fell to zero and their savings lost value. Cheap money spread worldwide, creating new bubbles, especially in real estate, where prices soared in cities like London. Capital drifted away from the real economy and into speculative financial arenas that resemble a global casino. The wealthy gained the most, while ordinary people struggled to keep pace. Borrowers and big corporations used low-cost credit to expand and dominate markets. Meanwhile, governments grew dependent on endless liquidity to manage rising debts, trapped in a snowball cycle. Money flood exposes how the zero-interest era deepens inequality and transforms economic power. The key question remains: in this new order, who truly wins?